Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. November turned out to be a cautious month for investors as they digested the various conflicting signals in financial markets. On the one hand, the world is enjoying a period of synchronized global expansion with all 45 members of the OECD reporting economic growth. On the other hand, there is a distinct feeling that the interest rate cycle has turned and that while rates may not go up very far, very fast, we are at something of a watershed and that in the short term, especially in the US, interest rates are headed up. There was therefore no clear trend to market movements last month. The UK market was down 1.8%, principally due to the pound rising against the dollar. Many of the UK's largest companies report their dividends in dollar terms, and so currency movements can have an immediate knock-on effect to share prices. Europe too was subdued, down 2%. Uncertainty over the Brexit negotiations is not confined to this side of the channel, and international investors appear to be gently banking some of the profits made during last year. Conversely, in the US, a wave of companies reporting positive third quarter earnings figures, particularly in the tech sector, helped the index gain 3.1%, although foreign exchange movements pared this back to a rise of just 1.3% for sterling-based investors. Interest rates in the US are definitely on the rise. The Federal Reserve will have a new chairman in January, but Jerome Powell is expected to pursue the same policies as his predecessor, Janet Yellen. A quarter-point rise is penciled in for later this month, with a further 4 quarter-point hikes forecast during 2018. While this might be expected to unsettle the markets, the prospect of sweeping tax reforms and evidence that the US corporate sector is in good health is helping investors view the impending monetary tightening as a signal of economic strength rather than a cause for concern. In Japan, the equity market also continued to make headway, gaining 1.5% over the month. Policy initiatives have been introduced to encourage companies to put large cash balances to work. The hope is that this will result in higher dividends, higher wages, and a greater confidence to spend. The Bank of Japan remains intent on pushing up inflation, and with no let-up in quantitative easing, investors remain positive. Elsewhere in the Far East, the Asia-Pacific Index managed a small gain of 0.6% during November, but there is evidence that the prospect of rising interest rates in the US is tempering investor enthusiasm for this part of the world. Bond markets too were unsettled by the prospect of a turn in the interest rate cycle. Global bonds did manage a gain of 1.5%, but after taking into account currency movements, this was translated into a small decline of 0.2% for sterling investors. As we go into 2018, markets remain fully valued, but with the global economy growing steadily, the corporate sector in rude health, and American companies enjoying a significant cut in taxes, markets should remain supported. All that remains is for me to wish you a happy Christmas and thank you for your support this year as we look forward to another prosperous year in 2018. Thank you for listening.
Okay, welcome to today's review of the True Potential portfolios. My name is Chris Leyland. I'm the Deputy Chief Investment Officer here at True Potential, and I'm going to spend the next few minutes talking about our flagship investment product, that is the True Potential portfolio range. Okay, so first let's start by discussing the performance of the portfolios. What we'll then do is look at what are the key themes we're seeing from our fund manager partners, and finally discuss what changes have been made over the month. Okay, so let's look at the month of November. The portfolios produced quite mixed returns, with defensive performing very well, although the income portfolios lost a little bit of ground, with the more UK-focused True Potential Threadneedle Monthly Income Fund underperforming the other funds which have more of a global reach within the True Potential fund range. Looking longer term, year to date, figures are excellent, with investors being rewarded for taking on additional risk. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential UBS fund ranges perform well, with their value-based style and ability to find returns that are less correlated to equity markets, helping to drive performance. The True Potential SCI fund range also produced some solid numbers, with their fund manager selection benefiting from taking a broadly diversified approach and gaining positive returns from their alternative exposures. Looking at the key themes we're seeing when we speak to our manager partners, our managers have remained positive on the economic outlook. They feel that economic growth has become increasingly synchronized across OECD countries, and corporate profits are both healthy and in many instances actually ahead of investor expectations. Okay, so moving on to what changes we've made over the month. We've made changes to 4 of our portfolios: Cautious, Growth, Balance Plus and Growth Plus. Within Cautious, we've reduced the position in the True Potential Allianz Cautious Fund, taking the view that the fund has the largest exposure to non-sterling currencies and negative should we see sterling strengthen, and also risk levels have been creeping up within the fund. We've increased the weightings to the True Potential Close Brothers Cautious Fund and also to the True Potential UBS Cautious Fund. Close Brothers have a half hedging policy to help mitigate currency risk, and their stock picking ability should work well as we move through the market cycle. For UBS, they have an ability to access returns that are not necessarily correlated to equity markets through their currency strategy, and also their strategic holding of value-orientated products. Within Growth, the True Potential 7IM Growth Fund has been reduced, taking the view that the manager's been overly focused on geopolitical risk and has been excessively cautious in what is a higher risk fund. The True Potential Close Growth and True Potential UBS funds were increased as per the rationale before. For Balance Plus, a new holding in the True Potential SCI Defensive Fund was introduced, with holdings in the True Potential SCI Cautious and True Potential Allianz Growth Funds reduced to bring down the overall risk of the portfolio and to bring it in line with the balanced categorisation. Lastly, for Growth Plus, we've added to the holding in the True Potential Close Balance Fund and reduced exposure to the True Potential 7IM Aggressive Fund. Around this time of year, it's very much a time to take stock and review what's happened over the year, but also to look forward to next year. For 2018, we do not know with certainty what will happen, but what we do know is that diversification will continue to mitigate risk. By using the True Potential portfolios, you can access a new high level of diversification around fund manager style, a way to spread risk even further, something that we call advanced diversification. Finally, I would like to take this opportunity to thank you all for your support in 2017 and wish you an enjoyable festive period and a prosperous new year. Thank you very much for listening today, and I will speak to you next time. Thank you.